was preparing for raising funds. How would you, a company's been around 2-3 years, they want to raise their next round, they're a team of 4, pretty early stage, they come to you, how would you prepare their documents or their papers for raising funds?
Sure. Well, at some point in time, the financials have to be audited.
Okay.
Right? So we have
Would
another.
you audit them or someone else?
No, an audit in itself is someone who is external of the company, so that they in fact are independent. Whereas I'm more internal, right? So I can't audit my own self-prepared financials, but
That'd
that's
be
fair.
nice.
It'd be wrong, but yeah, it'd be nice. It'd be nice. So the fees are starting to go up too, right? Again, we're talking budget and forecast. Well, if we need an audit, put some more dollars down over in month 12 because we
Okay.
need to pay for that audit.
Interesting. So how, could you tell me some of the steps you use to help them prepare for going to investors?
Again, I back to the fundamentals, and then we'll go fancy.
Okay.
Right?
Nice.
The data room, right? Building out, are we compliant? Have we met all the governmental requirements of making sure that we can run the business? We are running the business both at the city, state, federal level. Mind you, that's something that no one thinks about, but it's a necessary evil to make sure that the dollars can come in through the door from the investor. That one, financial statement presentation. Show a story. Show the story of what has happened and what is going forward. Those, those are over encompassing, but that's the foundation of what the financials need to show. Right.
Ed, this has been amazing information. And for more information, please visit us at siliconvalleysuccesses.com or visit us on Facebook or LinkedIn. But let's go back to Ed. Ed, preparing a company to raise money, how is it different than preparing a company to be acquired?
Wow. Acquisition mode. It's one and the same because you're starting to look at it from an investor's perspective. Is the corporation are we exchanging? Is this a stock sale or is this an asset sale? We don't even know, right? It got a little fancy.
It got a little fancy. Can you go with definitions, stock sale, asset sale, and who'd prefer what?
Again,
Twisted that one there
yeah,
for you.
I know. Oftentimes, what we describe as a stock sale, right? An asset sale often is when they don't really want the history of the company; they just want the technology.
Okay.
So they're just buying the assets and say the rest of it you guys can keep. It's cleaner for the acquiring company at times just to do an asset sale. It depends on what's important to the investor as well as to the founders too.
Okay.
So it's a really, I don't think it can be expressed in 30 seconds as to the advantage of one to the other.
Well, we'll get you back on the show then, and we'll talk mergers and acquisitions.
My pleasure.
Yeah. But let's go into a little bit more detail. So we've talked about a lot of things today. We've talked about early stage companies, getting them ready for fundraising to be acquired. We've talked about the 3 C's, compliance, cash flow, and
financial statement clarity. Yeah.
We've talked about the interactions between investors and the entrepreneurs. We've talked about bookkeeper versus controller versus CFO, when you bring them in, the different stages, how they work together, the pony show, or however you like to call it.
The road show.
The road show, when they're going out to raise capital, and that confidence that's needed by the investors to see who's managing the money more or less.
Well, they're not only they want someone on the back end, which is me, conservative, making sure that the monies are well protected for the benefit of the investors, but they are also looking at the CEO to make sure how believable is the story, how strong how far can this CEO take the company? They're often listening for the strength of the management team. It's not always about the financials. They come secondary, but they're looking at the CEO and saying, okay, how strong is your management team?
So that management team, how closely are they looking when it's a very, very early stage company versus maybe a little bit later stage?
Sounds like high risk on a very, very early stage, yes. Therefore, valuations are lower in risk reward.
So at the very beginning of a company, when it has no revenue, when it has no money, what are the investors looking for at that point?
You know, that's seed right there. And oftentimes you're still at family and friends just saying, is this thing real? Is this proof of concept stage or earlier than proof of concept? How far along are you in terms of building a viable commercial grade revenue driven company? That's far out there. That's once you're there, it's a good feeling. A lot of companies unfortunately don't make it there.
So that early stage when it's just friends, families, and fools, they sometimes say, what does that look like from the accountant or bookkeeper when they come in the picture and they found 20 people have written a $2,000 check each for the company?
Yeah, it's I bet you the paperwork's just atrocious already, right out the gate. So for a true investor to come in, that's got to be cleaned up.
What do you mean by cleaned up?
Executed documents, are there really stock purchase agreements in place? Are the minutes all put together?
Minutes?
Yes, yeah, and implying, you know, do you have legal counsel already set up so that it is prepared for the true investor to come in? Because those early stage, it's just they're just flying by the seat of their pants, just trying to make it, and paperwork is secondary, but at some point in time, the paperwork becomes fundamentally important.
Interesting. Now, Ed, I heard you have something called the
Project Tracker.
Tracker? What is the Project Tracker?
It just keeps us, because we manage many companies, and for me to just go in and company A on Monday, company B on Tuesday, company C on Wednesday, I'm like, wait a second, I got to keep this all in track. What projects are we working on? Who's responsible? When's the start date? When's the end date? How much have we completed? And it just keeps moving forward. So it keeps us on track as to what does the company need. It's my report card. Have I done my job for company A on Monday? Because I got to flip my hat on and go to company B. What's that project tracker look like? It's not just one company, because as a fractional CFO, we need these tools in place to make sure that we are keeping track with each different project. One may be SaaS, one may be blockchain.
Okay.
The third one may be construction. Right.
So if you were a startup founder and